Okay, is the screen visible?
Yes.
Okay.
Yes.
Let me read the question. P and Q are partners in a firm. P is allowed for the salary of 10,000 per month and commission of 10% of net profit before charging commission. Q is entitled to net profit after charging his commission. The net profit for the year ended 31st March 2024 is 5,40,000. Prepare profit and loss appropriation account. Okay. So just draw the columns of profit and loss appropriation account, maybe around 10 lines. And once the columns are ready, please tell that it is done.
Done.
Yes, Fiza, are your columns ready?
Yes, sir.
Okay. Now let us refer to the question. Please draw the golden box also. I hope you can draw it now.
Yes.
Tell me what is the first heading.
Asset, expense, and loss.
Very good. What is the normal balance for that?
Debit.
Debit. If it is increasing,
Debit.
Debit.
debit. And if it is decreasing,
Credit.
Credit.
credit. Okay, tell me the next second heading.
Liabilities, income, profit.
Liabilities, income, and profit.
Profit. Tell me the normal balance.
Credit.
Credit.
Credit. If it is increasing,
Credit.
Debit.
credit. And if it is decreasing,
Debit.
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 Okay, fine. Now let us see what is given in the question, right? P and Q are partners in a firm. P is allowed for the salary of 10,000 per month. Okay. And commission, so we will talk about commission afterwards. Let us see what is happening in the firm first. Okay. So I will just remove all these things. Okay, now suppose the firm is giving salary to P, right? Suppose this fellow is P. So tell me, for the firm, whether it is income or expense. Hello.
Sir, could you please repeat?
Uh, if firm is giving salary to P, so for the firm, whether it is income or expense.
Expense.
Expense, right? So can I say expense is increasing?
Yes.
Yes.
Okay, so what your golden box is telling?
It will be written in debit side.
You have to say the full statement. If
If expense is increasing, it will be written in debit side.
Yes, so we will write it on debit side, right? So write in debit side to salary to P. Okay. and in the question it is given that it is 10,000 per month. So in a year there are how many months?
12.
So
12.
multiply that 10,000 by 12 and tell me what will be the answer.
12,000.
10,000 into 12 is 12,000. Nasiha?
1,20,000.
One
Yes,
lakh 20,000.
1,20,000. Fine. Any doubt in this?
No.
Shall we proceed?
Yes.
Okay. Now, further they are telling that commission of 10% on the net profit before charging commission. Okay. So now this time business or the firm is giving commission. Okay. Tell me now whether for the firm this commission is income or expense?
Expense.
Expense. So can I say the expense is increasing?
Yes.
So what the golden box is telling?
If expense is increasing, it will be written in the debit side.
Debit side.
Debit side. Okay. And see, read the statement. It is telling that it is to be charged at the rate of 10% before charging the commission, right? So naturally this profit is before charging the commission. We had not charged the commission, right? So we will purely apply 10% on this, right? So 5,40,000 into 10 upon 100. First we will write it on the debit side. We will write here to commission to P. Okay, and calculate 10% on 5,40,000. Yes, tell me what will be the answer.
54,000.
54,000. Okay, any doubt?
No.
Okay,
No.
now let us read the next statement. Q is entitled to a commission of 10% of net profit after charging his commission. Okay, now first of all let us see the explanation part. Suppose this fellow is Q now, right? Again the logic remains same. A firm is paying commission to Q, right? So for firm this commission is what?
Expense.
Expense. So can I say the expense is increasing?
Yes.
So what the golden box is telling?
If expense increases, it will be written in the debit side.
Debit
If
side.
you increase
So
it, it will be written on the
we
debit
will
side.
write on the debit side to commission to Q. Okay, now see, just be careful what will be the calculation, right? Now see, they are telling that this 10% is to be calculated on the profit after commission, right? So unless and until we know the commission, we don't know the profit after commission, right? So this profit is not after commission, it is before commission. Am I right?
Yes.
So
Yes.
here it will not be purely 10%, it will be 10 divided by 110. 10 divided by 110. Okay, see why it is 10 divided by 110. I will show you the logic of that. Let me come to the explanation part and show you the logic. Okay, suppose I will assume that net profit after commission, because they are telling that it is to be taken after commission, right? So I will assume that net profit after commission is 100. Why I am taking the base as 100? Because the base of percentage is 100, right? And the commission is 10%, so I will say the commission is 10, right? So can I say that net profit before commission will be 110? Am I right?
Yes.
Now, the data which is available to us, the profit which is available to us, is it before commission or after commission? This 5,40,000, tell me, is this before commission or after commission?
After?
Have we subtracted the commission, or see, do we know the commission of Q at this position?
No.
Tell me, do we know what is the commission of Q at this level?
No, we don't.
10%.
Right, no? So that means this is before commission. The profit is before commission, right? So I will write it here, 5,40,000. I will write it here, right? Now if we do the cross multiplication, it becomes what? 5,40,000 into 10 upon 110. Got it? No? Why it is coming 10 upon 110? The logic behind that.
Sir, I did not understand.
Can you repeat?
I am just repeating. See what they are telling, that in case of the second person, the commission is to be calculated on the profit after charging his commission, right? So we don't know what is the profit after commission. So we will say that profit after commission is 100. Am I right? What is commission?
Yes.
10% will be 10.
Yes.
So what will be the profit before commission?
110.
110. Or let me put it this way, like say for example, I am writing here net profit before commission,
100.
and net profit after commission. Okay, so I am assuming that uh, net profit before net profit after commission is 100. Okay, commission is 10. So net profit before commission will be 110,
Yes.
right? So whatever figure we are having, it is before commission, right? So this 5,40,000, if I am putting here and if I am doing the cross multiplication, so how you will calculate commission? 5,40,000 into 10 divided by 110. Clear?
Yes.
Can you cross multiply this? Tell me what is the answer coming now? 5,40,000 into 10 divided by 110. What is the answer? Yes, 5,40,000 into 10 divided by 110 is how much?
49,090.
90 point something it is coming, right?
Yeah, it's coming in
Yes.
decimal.
So it will be rounded off to 91.
Okay.
Any
Okay.
doubt?
No.
Okay.
No.
Now let us proceed further. What they are telling, net profit for the year ended 31st March is 5,40,000. Okay. So can I say profit is increasing?
Yes.
So what your golden box is selling?
If profit increases, it will be written in the credit side.
Taking on the credit
So
side.
write it on the credit side by net profit brought down 5,40,000. Okay. Now we will do the balancing for this. uh, on credit side it is how much? 5 lakh 40.
5
Okay, 5 lakh 40. So I am just writing here on credit side it is 5 lakh 40. Just do the total of the debit side. What is the total of debit side?
2,23,091.
Yes, 2,23,091. So which is heavier?
credit.
So credit side is heavier. So write heavier total on both the side. Okay, and whatever difference will come, that will be the profit which will be transferred to capital account. Okay, and what are the name of the partners? P and Q are the
Q.
partners. Okay, so we will write here partners capital P and Q. Okay, and find out the difference now. Subtract this.
3,16,909.
3,16,909. Okay, now I think in the question, if the ratios are not given, then we have to share it equally. So divide this profit equally.
1 1,58,454. It's coming in decimal.
So at one place you have to increase. Don't increase at both the places, right?
Okay.
So we will increase at the top, and for this fellow, no, we will make it 1 5, because if we will increase at both the time, then it will not tally. So for one person we are increasing, and for the second person we are not increasing. Okay, because same number you cannot round it off two times. You have to round it off only one time.
Okay.
Okay, so for the first fellow keep 55, and for the second fellow keep 54. Yes, done.
Done.
Okay, so any
Done.
questions in this? In this, the only typical part was the commission of Q, since they are telling that it is to be calculated after charging his commission, and we don't know what is his commission, right? That's the reason here we are not plainly dividing by 100. We are dividing by 110, because the profit which is given to us, it is including that commission, right? Because unless and until we know the commission, we cannot find out the profit after commission. Is that clear? That's the reason it is divided by 110. Fine.
Yes.
Okay, so this question is completed. Question number 13. Let us solve question number 14. Okay, now question number 14 is a conceptual question. Okay, we will just read it and we will try to answer it, right? So I am just reading it. Raju and Jay commenced business in partnership on April 1, 2023. No partnership agreement was made, whether oral or written. Now you have to concentrate on this point. What they are telling, no partnership agreement was made, whether oral or written. Okay, and if partnership agreement is not made, in that case what the partners are supposed to follow? The partners are supposed to follow the partnership act. Is the concept clear?
Okay.
Okay, if the
Yes.
partnership agreement is not made, they are supposed to follow the partnership act. Okay, now here they are telling they contributed 4 lakh and 1 lakh respectively as capitals. Okay, in addition Raju advanced 2 lakh as loan to the firm on 1st October 2023. Raju met with an accident on July 1st, 2023 and could not attend the business up to September 30, 2023. The profit for the year ended 31st March 2024 amounted to 50,600. Disputes have arisen between them on sharing the profits of the firm. Okay, so there is a dispute, right? Now what they are asking, the A question is, in the absence of partnership deed, Jay is entitled to an interest on the amount of capital advanced by him to the firm at the rate of. Okay, now here there are four options which are given, right? The first option is telling that entitled for 6% per annum on capital only when there are profits. The B they are telling that entitled for 10% per annum on capital, entitled for 12% per annum on capital, not entitled for any interest on their capital. Now out of this four, you all tell me what is the correct answer.
Is it not entitled for any interest
Option
on
D.
the
1 minute, what Nasiha is telling?
Is it not entitled for any interest on their capital?
Okay, what about Fiza?
Yes, even I think it's option D.
Option D. Why?
Because there is no partnership.
Because there is absence of partnership deed.
So since there is no agreement, they have to follow the Partnership Act, right? And Partnership Act tells that if there is no agreement, then no interest on capital. Clear?
Okay.
Yes,
So
sir.
the correct answer is D, right?
Yeah.
Yes.
let us see the B question what they are telling. Okay, now in B they are telling that in the absence of partnership deed, Raju is entitled to an interest on the amount of loan advanced by him to the firm at the rate of 6% per annum on the loan only when there are profits, 10% per annum on the loan, 6% per annum on the loan even though there is loss in the firm, not entitled for any interest on the loan. Now tell me what will be the correct answer for B.
Is it option C?
Yeah,
Yeah, option.
option C, right? What is option C? 6% per annum on the loan even though there is loss in the firm. Okay, so for loan the Partnership Act is telling that we have to give 6% interest per annum even though there is loss. So the correct answer is C. Okay, let us the next one. Interest allowed on partners capital, what journal entry will be passed in the books of the firm? Okay, the first entry is interest on capital account debit to partners capital or current account. The second entry is interest on capital account debit to profit and loss account, and profit and loss appropriation account debit to interest on capital account, and none of this. Tell me what is the answer for C.
Option A.
Yes, option A. Okay, we have to debit interest on capital. Why? Because loss is increasing, so interest on capital will be debited and who will be credited? Partners capital or current
The
account
partner.
will be credited. Okay, now let us read question number D. Now see, this is assertion and reasoning question. Okay, uh, assertion they are telling partners distribute profit and losses in their profit sharing ratio and not in the ratio of their capitals. This is the assertion, right? Now first tell me, what do you think, whether this is true or false?
True.
It is true. Now let us read the reason first. First we will read the statement individually and see whether it is true or false, right? Now let us read the reason. If the amount of appropriation is more than the amount of profit available for distribution, profit is distributed in the ratio of appropriation. Okay. Now see, this is also true. I will tell you why it is true. Like suppose the credit side the net profit is 1 lakh. Okay. And on the debit side whatever amount is coming, it is 1 lakh 20. Am I right?
Okay.
So in that
Yes.
case what will happen, you know, whatever profit they are having now, that is only 1 lakh rupees will be distributed among the partners in the ratio of expense, in the ratio of
Expense.
expense. Okay. So basically this R is also true.
Then what about the 20,000?
Means that
Yeah.
20,000 there, I will show you in the explanation part. 1 minute. Let me open, let me show you in this itself. Okay. See, I am just modifying the data of this. Uh, okay, let me show it in some other account itself. Like suppose here I am taking the partner as A and B. Okay. See, 50,000 interest is to be given to A and 30,000 is interest is to be given to B, and the total comes to 80,000. Is that clear? This is the debit side amount of appropriation account, right? And on the credit side, suppose we are having net profit. On credit side, suppose we are having net profit of only 60,000. How much net profit we are having? Only
60,000.
60,000. Is that clear? So now you tell me, can we distribute this? I mean, we are having less profit and the amount to be distributed is more. Am I right?
Yes.
So in this case, what we will do, you know, we will not write this salary here, and instead of that, what we will do, 50,000 and 30,000 is the salary, no? So in this case, what we will do, you know, we will distribute this 60,000 itself to partners capital between A and B in the ratio of 5:3. That is 60,000 multiply by 5 divide by 8. 37,500. 60,000 multiply by 3 divide by 8. You are getting my point what I am telling? Means if the profit is insufficient, then in that case we will not consider that expense, and whatever is the profit available, we will distribute it in the ratio of expense. So 50 and 30 was the expense to be paid to the partners. So in that ratio itself we will be distributing the 60,000 profit. Any doubt?
So the net profit will be distributed in the ratio of 5 to
Yeah,
3.
yeah, it will be distributed in the ratio of 5:3 and not the profit sharing ratio. This is called
Okay.
expense ratio. Okay.
Okay.
Only in case when the net profit is insufficient. Understood?
So when the firm faces loss, it will be distributed. The net profit will be distributed in the loss ratio.
In the ratio of expense. Expense means
Okay.
whatever, like suppose 50 and 30 was here, no? So we took the
Okay.
ratio as 5:3, right? So same thing this fellow is also telling
So
that if the amount of
60,000,
yeah, 1 minute,
60,000
is the profit.
yeah, so that is divided, right?
Yes, we have to divide only the 60,000 and remove that
Then what happened with the extra
whatever I
amount?
had written, no, 50 and 30, that is not supposed to be written.
Then what will happen with the extra amount?
There is no extra amount. You If you take the total both the side, it is 60 now.
Okay.
Okay. See, indirectly also what happens, if we pay this to them, right? Then there will be a loss of 20,000.
Yes.
Okay, and we will divide that loss. So ultimately the final result comes to that only. So that's the reason what Partnership Act is telling, that if your profit is insufficient, then you divide that profit itself in the ratio of expense. So you get the net effect. Okay,
Okay, sir.
fine. So here both the statements are true, but then these are not related. See, the correct answer for this is both A and R are true, but R is not the correct explanation of A, because this is a separate statement and this is also a separate statement. It is not the correct explanation of A. So the correct answer is B.
Okay.
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 See, both A and R are true, but R is not the correct explanation of A. Okay. See, they had given the explanation also. Yes, generally partners distribute profit in their profit sharing ratio. Then next point, assertion is true, reason is also true. When appropriations are more than the available profit, then profit is distributed in the ratio of appropriation. But reason does not explain why profits are distributed in the profit sharing ratio. Okay. So clear, these two questions are clear.
So if they say that appropriation is more, that means loss is more.
uh, yeah, the distribution part is more. Yeah, the debit side is more.
Okay.
The debit side is more. Okay.
Yes, sir.
Okay,
Yes.
now let us move further and let us study some more concepts in this before going to the problems, right? So we will just discuss the concept. Okay, is it readable?
Yes.
Write the question in your notebook.
Yes. Done.
Okay, so see, the question is, write a note on computation of charging items. Okay, so the first point is telling that such expenses are charged against the profit and are shown on the debit side of profit and loss account. This is one way of considering the charging items. Charging item means they are to be compulsorily charged, whether the firm is in profit or loss. Another way is, such expenses can also be shown on the credit side of profit and loss appropriation account as a deduction from the net profit before appropriation if these items are adjustments in nature, right? Means if these expenses are given in the form of adjustments, so in that case we are preparing only profit and loss account. So we will be using the second approach. We will be deducting it in the from the net profit before appropriation. Okay, like see, we will see the situation. Explain the situation of charging items, right? Suppose profit before rent is there, interest on loan and manager commission is given, right? So what treatment we will give? Rent, interest on loan and manager's commission will be subtracted from the profit. Okay. Now next is profit after rent, interest on loan and manager's commission is given. So naturally, if this profit is after all these things, then there is no need to subtract, right? No need to subtract profit as it is already debited to profit and loss account. Now profit after salary of partner or commission to partner is given. So salary to partner and partner's commission will be added back before transferring profit to profit and loss appropriation account. Okay. Now we had already discussed this about interest on partner's loan, right? See what they are telling: write a note on interest of partners on interest on partner's loan, right? So if a partner advances a loan to the firm, he is entitled to receive interest at an agreed rate of interest on partner's loan, as it is a charge against the profit and not an appropriation out of profit. That is, it is to be allowed whether there are profits or not. Interest on partner's loan is an expense for the firm, whereas interest on loan is a gain to the partner. If there is an agreement as to the rate of interest, then partner is entitled to interest on loan at an agreed rate of interest. If there is no agreement, then partner is entitled to interest on loan at the rate of 6% per annum, right? You know already this concept, right? Yes.
This was the
Yes.
situation in the last question, right?
Yeah, it was there in the last question, right? Now the accounting treatment. What will be the accounting treatment? The entry will be interest on partner's loan account debit to partner's loan, and the partner's interest on partner's loan will be transferred to profit and loss account, right? Profit and loss account debit to interest on partner's loan. Important note: interest on partner's loan is always credited to partner's loan account or interest payable account and is never credited to partner's capital account. Okay, means this interest on partner's loan will never go in partner's capital account. It will either go in partner's loan account or it will go in interest payable account. Okay, so this concept is clear.
Yes.
Yes.
Okay, let us proceed further. Let us talk about manager's commission. Write a note on manager's commission. Now calculation of manager's commission. Commission to a manager can be allowed in two ways, right? When a manager is allowed a commission on the net profit before charging his commission, then manager's commission is equal to net profit before commission into rate of commission divided by 100. Same concept as we had with the partner's commission, right? If it is after if it is before charging commission, then there is no problem. We will directly calculate means divided by 100, whatever is the rate divided by 100. But if they are telling that when the manager is entitled allowed a commission on the net profit after charging commission, right? Now here the same situation, unless and until we know the manager's commission, we cannot know the net profit after charging commission, right? So in that case, whatever is the rate, we will add it in 100. Suppose the rate is 10 per, so we will write here divide by 110. Suppose the rate is 5, we will write divide by 105. Suppose the rate is 7, we will write divide by 107. Clear? This concept is also clear?
Okay.
Okay. Now let us talk about rent paid to a partner. Okay. Explain rent paid to a partner. See, rent paid to a partner is a charge against the profit and not an appropriation out of profit. Therefore, it is debited to profit and loss account. Journal entry will be first for paying the rent, rent account debit to cash or bank, and then transferring the rent. The entry will be profit and loss account debit to rent. Okay. So these are some of the concept. Now based on this concept, let us solve at least one problem if it is possible. Let me close this. Let us go to the question. We had discussed question number 14 right now. Yes. Now we will move further and we will discuss example number 15. Okay. So let us read this first. Aman and Arav are partners sharing profit in the ratio 3:2 with capitals of 50,000 and 30,000 respectively on 1st April 2022. Arav advanced loan of 20,000 during the year and the partnership deed is silent on the question, okay, of interest on it. Interest on capital is agreed at 6% per annum. Arav is to be allowed an annual salary of 2,500 for the year ending 31st March 2023. The profits for the year prior to the calculation of interest on capital but after charging Arav's salary amounted to 12,500. A provision of 10% of the profit is to be made in respect of manager's commission. Prepare an account showing the allocation of profit and the partner's capital account. Okay, so two accounts we are supposed to prepare. One is appropriation account, I think. 1 minute. Yes, they are asking only for one account, that is profit and loss appropriation account. Okay, so just draw this account, and after drawing the account please also prepare the golden box and tell me once you are ready.
Done.
Done.
Okay, now let us start the question. See what they are telling. Aman and Arav are partners sharing profit in the ratio 3:2 with capitals of 50,000 and 30,000 respectively on 1st April. Arav advanced loan of 20,000 during the year and partnership deed is silent on the question of interest on it. Okay, so partnership deed is not telling anything about the interest on loan. Okay, now what they are telling here, interest on capital is agreed at 6% per annum. Okay, now tell me, interest on capital for the firm, whether it is expense or income.
Expense.
Expense, right? So can I say the expense is increasing?
Yes.
So what your golden box is telling?
If expense is increasing, it will be written in the debit side.
So shall we write it on the debit side?
Yes.
Yes.
Just write interest on capital. And who are the two partners?
Aman and Anna.
Aman
Aman
and
and
Arav.
Arav.
Okay. Now, how much capital they are telling? It is 6%. Percentage is 6%, right? So what is the capital of Aman? 50,000. On 50,000, 6% will be how much?
3,000.
3,000. Okay. Then the second partner's capital is 30,000. On 30,000, 6% will be how much?
1,800.
1,800. What will be the total?
4,800.
4,800. Okay. Now let us proceed further. Uh, Per annum. Arav is to be allowed an annual salary of 2,500 for the year ending 31st March 2023. Now again same. If the firm is paying salary to Arav, suppose this fellow is Arav. right? So for the firm, is it income or expense?
Expense.
Expense. So can I say expense is increasing?
Yes.
Okay.
Yes.
What the golden box is telling?
If expense is increasing, it will be written in the debit side.
It
It
will
will
be
be
written on the
written to the
debit side. So
debit.
we will write here to salary to Arrow. To salary to Arrow. And see, read the statement carefully. It is the annual salary. Means 2500 is for full year. It is not per month. Okay.
Okay.
So how much we will write? Tell me.
2,500.
2500. Okay. 2500 for the year ending 31st March 2023. The profits for the year prior to calculation of interest on capital but after charging Arrow's salary amounted to 12,500. So profit is increasing, right? So what the golden box is telling?
If profit is increasing, it will be written in the credit side.
Written to
It will be
credit
written
side.
in the credit side. So I am writing it in the credit side and I am writing it in the inner column. Okay. See why I am writing this in the inner column, because here they are telling that the profit for the year prior to calculation of interest on capital, means they had taken out this profit before charging interest on capital. That is fine. But then here they are telling, but after charging Arrow's salary, means this profit we had removed after charging Arrow's salary. So you cannot take the profit after charging Arrow's salary, because Arrow's salary is not a charge, it is appropriation, right? So since this 12,500 is after charging Arrow's salary, we will add back that Arrow's salary in this. That is how much? 2,500, and the profit will be, actual profit will be how much?
So only charges subtracted and appropriations are added back.
Means since the salary of partner is subtracted, we have to add back that.
So appropriations are added back to the profits, right?
Yes, yes. Now here we have to subtract one more thing also, right? See, he has given loan of 20,000. Even though the partnership deed is silent, right? But we have to follow the partnership act, right? What the partnership act tells, tell me?
6%.
Six
So
percentage.
we have to charge 6% interest on loan. That is to be subtracted. Less interest on loan. Calculate 6% on 15,000. How much it will come? 6% on 15,000.
900.
900.
900 it is coming. Here it is coming 1200. No, no, sorry. It will be calculated on the loan amount. What is the loan amount? 20,000. Right? On 20,000 calculate 6%.
1,200.
Yes, 1,200 is correct. Okay. Now, in this we should also subtract the manager's commission, right? How much commission they are telling? A provision of 10% of the profit is to be made in respect of manager's commission, right? So manager's commission also we will subtract over here. Okay, see what will be the manager's commission? From 15,000 you deduct 1,200. No, sorry, on 15,000 calculate 10% commission. How much it will be?
On 15,000, 10%. percentage.
Yes, 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%. 10%.
1,500.
1500. Take out the final answer now.
to 1,300.
12,300.
300.
So again the credit side total is heavier. So we will write heavier total on both the side. Okay. And whatever is the profit coming,
Profit.
it is coming to something 5,000. Okay, we will check whether there is any ratio given. Yes, 3 is to 2 is the ratio, right? So divide this in the ratio of 3 is to 2. Divide this 5,000 in the ratio of 3 is to 2.
3,000 and 2,000.
3,000 and 2,000.
3,000 and 2,000.
Okay.
Yes.
Is it fine? So shall we stop here today?
Yes.
Next class we will keep it on Saturday.
Okay, sir.
Okay.
Um,